Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening, you're watching CNBC TV18 and this is After the Bell. Let's take a look at the top stories that we are tracking for you this Tuesday evening. The bulls continue their Dalal Steet dominance. Nifty ends just short of 10,100 while Sensex rallies 275 points. All other sectoral indices also close in the green. MIDCAP index posts record close for the second day in a row. Another indication that the GST Council is moving towards a single GST rate. Over 100 items left untouched and demands like putting textile, fabric in nil category kept in abeyance. An exclusive report up ahead.
From 2020 onwards, all of our cars will deliver the option to be electrified.
That's the word coming in from JLR CEO Ralf Speth says that they will be electric ready by 2020 and battery cars will hit markets faster than expected. That's another network exclusive. CBI casts a wider net and probe into FDI investment in INX Media. Will probe role of erstwhile FIPB officials. Tells the Supreme Court that Karti Chidambaram has 25 properties abroad.
2012, and I'll say this, a certain arrogance crept into the Congress party.
Rahul Gandhi accuses the Modi government of damaging the economy during his US tour, says that the demonetization decision was taken without consulting the chief economic advisor. BJP hits back and calls him a failed dynast. AIADMK General Council ousts Sasikala from Party General Secretary post, also resolves to set up a steering committee led by Os Paneerselvam. Also on the show, a CNBC TV18 editors roundtable. Shireen Bhan, Prashant Nair, Anuj Singhal and Manisha Gupta will discuss the disjoint nature of crude versus retail oil prices. While crude prices are down 50% since 2014, retail prices are back at 2014 peak. That interesting chat in just 10 minutes, but let's get you the market action of today. It's day of the week and bulls continue to dominate the bears. It was second best close for Nifty, which ended just short of the 10,100 mark. The Sensex recame 32,000 with gains of close to 1%, while mid-caps also mirrored the benchmark indices with gains of almost 1% by the end of the day. The Bank Nifty posted subdued gains of about 0.5%. The star of the day today was the Pharma Index, which gained almost 2% by the end of the day. We have Anuj Singhal joining in now, as always, with a wrap of today's trading action. Anuj, the strength for the bulls seems to be continuing. How sustainable is this?
Phenomenal day for the market. There was a big surge. The breakout got confirmed in today's trade. The non-bank Nifty stocks actually led the market today, which was also positive because it was getting a bit too narrow. Big surge in cash market volumes, and one of the reasons that you could have seen this big move also was because in the morning CLSA came out with a note saying that double-digit earnings growth is possible by September quarter. Now CLSA is a very influential brokerage, and one thing which this market has been missing is earnings growth. And if it's as early as September quarter, then you know that last remaining piece could also be befit in the market, and that could be one reason that you saw that big surge in market today. In terms of stocks, it was across the board. So Tata Motors, ITC, Lever, oil and gas stocks like BPCL, GAIL and IOC also rallied. Pharma stocks like Sun Pharma and Aurobindo Pharma. In fact, Divi's was your stock of the day. And some F&O gainers included names like KPIT, Adani Power and Voltas. So new highs for markets daily, at least for broader markets. For the Nifty also, we are back to lifetime highs, almost there actually. So let's see if further gains can continue from here.
Okay, Anuj, thanks for joining in with that. A good day for the markets, but let's get stock specific. Mid-sized luxury cars and SUVs may become costly after the GST Council decided to levy an additional cess on them. But we learned that the tax rates for nearly 100 items have been left behind and left untouched. Remember, post the July 1st rollout of the GST regime, there was a clamour for a cut in GST rates from a number of industries. Sapna Das, in fact, broke that story earlier today, and she's here with the details. Sapna, take us through some of the products on which the GST Council have maintained a status quo.
Well, what we are given to understand clearly is the fact that goods over 100 in number, here the ratio internally from the council appears to be maintaining a status quo in terms of rates. So large number of items, around 130, 140, out of which 40 odd got tweaked. But the remaining, the suggestion is to maintain a status quo. And clearly on two accounts, a lot of these items, say for example, namkeen, footwear, IT products, biscuits, biodiesel, most of these products fall in the 12% or the 18% category. And here the thinking appears to be that anything lower than 12 or 18% will not be very encouraging, because the overall goal appears to be moving towards a single rate of either 18% or at least maintaining two tax slabs of 12% and 18%. So pushing them lower, either in the 5% category or just making them completely exempt, may not be very welcome. The second aspect, of course, that is coming up, and that's again in terms of, say, for example, the demands that have come in for textiles and fabric, making them completely exempt. Here again, those demands have stood rejected, simply because this will create pressure for the domestic industry. Plus, later on down the line, there is no ITC available, because for a lot of products, probably the input tax rates are higher than the output tax rates. Similarly, in terms of your GST, in terms of services, proposals that come in for 22 services to basically tweak the rates, all of them have been found unacceptable, and the big ones among them are restaurants, hotels, movie tickets, entry into amusement parks. Most of the proposals have been found unacceptable. So again, a status quo on those rates. Clear direction appears to be coming that possibly not too many rate revisions are going to happen very quickly now. They are waiting for the system to stabilize. More GST data will come in once the returns for GST are also filed.
Okay, Sapna, thanks for that. Now, last week, Road Minister Nitin Gadkari said that India plans a faster transition towards electric vehicles. Just a few days after that statement, China also unveiled its plan to ban petrol as well as diesel cars. And now, in this very backdrop, the CEO of Jaguar and Land Rover, Ralf Speth, has said that the future of mobility will be electric cars. In an exclusive conversation with CNBC on the sidelines of the Frankfurt Motor Show, JLR CEO added that proper collaboration between governments and energy market participants can ensure a proper push for electric mobility.
It's quite clear the future will be electric, and therefore also we are going to deliver step by step a complete electrified portfolio. And from 2020 onwards, all of our cars will deliver the option to be electrified. So plug-in hybrids or mild hybrids and or battery electric vehicles. And we are ahead with a battery electric vehicle with I-Pace.
Are you already investing heavily in battery factories as well?
We see that the prices are going down around about 10 to 12% per year, and in addition we see simultaneously that the density or the capacity is going up. And so, yes, we need batteries, we need the battery packs, and we have to think about the cells which are and the chemistry of the overall battery.
But how confident are you that you actually get the reach, like 500 plus kilometers on a battery car, like sooner than later?
We're going to offer the I-Pace already next year. And this vehicle will have already this range of around about 500 kilometers.
Many car makers are saying that for like a huge sales effort for e-cars, like electrified cars, what is needed is the infrastructure that you can also load these cars. So what are the plans here?
At the end of the day, it needs a collaboration in between the energy market, government, and quite clear also the OEMs. But I'm absolutely confident we will see battery cars faster than anybody expected on the street.
Okay, time now for the political corner. A war of words has broken out once again between the BJP and the Congress party. This time around, it has been triggered by comments made by Congress Vice President Rahul Gandhi. In an interaction at the University of California in Berkeley, the Congress Kayan hit out at the Modi government for politics of polarization. He also said that the Congress had become arrogant in 2012. Responding to a question on dynasty politics, Rahul Gandhi said that that is how India works.
Most parties in India have that problem. So don't give us stick, because Mr. Akhilesh Yadav is a dynast, Mr. Stalin is a dynast, Mr. Dhummal's son is a dynast. So, even Abhishek Bachchan is a dynast. I mean, that's how India runs. So So, I mean, don't get after me.
The fact that he says that dynasts and dynasty is the very fulcrum of India in itself is an anomaly. 3 dignitaries at the highest constitutional positions in our country are in themselves an indication that Indian democracy thrives and gives an opportunity to merit and is not beholden to dynasty.
Somewhere around 2012, and I'll say this, a certain arrogance crept into the Congress party. And they stopped having that conversation.
This gentleman, who is the vice president of the Congress party, has publicly proclaimed that under the leadership of Srimati Sonia Gandhi, the Congress became arrogant. This confession made by the vice president of the Congress party is something for the Congress to delve into.
There is a tremendous machine, 1,000 people or so, that all they do is spread abuse about me. And the operation is basically run by the gentleman who's running our country.
The fact that Mr. Gandhi chose to belittle the Honorable Prime Minister is not surprising, in fact expected. But what is to be said is that after failing to connect with the people of India, Mr. Gandhi chooses a platform of convenience for berating his political opponents.
Petrol prices in Mumbai are now close to 80 rupees a litre, and this is the highest that we've seen in the last 3 years. But what's interesting and perhaps confusing is this. The price of crude oil right now is pretty much half of where it was in 2014. So what explains the surge in petrol and diesel prices? That is the topic for our editors' roundtable. But first up, Prashant joins us now to explain the pricing mismatch. Prashant, taxes to blame very clearly here.
Oh, absolutely. I think you can put the entire blame on taxes. I mean, the bulk of the heavy lifting in terms of the blame has to be carried by taxes. Let's actually start with, and these are all prices in Delhi. I mean, for like-to-like comparison and going back in history, I've taken Delhi prices at the pump. So let's start with diesel in Delhi. Take a look at the prices right now. 58.6 rupees a litre. The high back in October of 2014 for diesel was 59. I mean, you're basically talking about prices being at an all-time high currently. What was the oil price back in October 2014? It was $100 a barrel. We are at 54. You're basically talking about oil prices essentially halving. The next two rows essentially explain where the problem lies. The government has collected way more excise than it used to back then. I mean, the component of excise, which is ad valorem, by the way, in October 2014 for a litre used to be 3.5 rupees. It's jumped 5 times to over 17 rupees a litre now. So the central government is collecting way more in terms of taxes, even as oil prices have continued to come off. I mean, that benefit has not been passed on to consumers. The VAT, which of course differs state by state, and which is also a component within the price that you pay at the pump, has also jumped. It's jumped almost 1,000 basis points from 6.8% to 16.75%. Dealer commissions, well, you can nitpick about that, and they have gone up by about 84% or so, but they're about 2.18. As I said, the big sort of component are taxes, excise and VAT. Let's go on to petrol. And I think you basically see a similar kind of picture. The high back then was 76 rupees a litre, 76, a little over that. We're at about 70 rupees and 30 paise right now. And as you said, in Mumbai, of course, we're 79 plus now. VAT, of course, increase here was, and Manisha will talk about that a little later. Crude oil prices are 108. I mean, the peak for petrol was essentially September 2013. The peak for petrol was 108. Global oil prices, 108. We're at 54 now. Again, big fall. Excise, though, has moved up about 2.5 times. 9.6 odd rupees a litre was the excise back then. We are paying 21 rupees and 50 paise. You look at VAT, 12.7. The jump is almost 1,400 basis points to 27%. And you get dealer commissions, again, about an 84% increase in dealer commissions a litre. Back to you.
So very clearly, Prashant, tax is to blame, and you've set it up very nicely. But here are the key questions. Are oil companies profiteering? Are taxes in India too high compared to other countries? Is dynamic pricing of fuel prices really a reality? Anand Sehgal and Manisha Gupta also with us. Manisha, let me come to you now. Take us through the global perspective. Let's not go very far. Let's look in our neighborhood. I mean, how much higher is the price of fuel in India in comparison to what it is in our neighborhood?
Well, much higher, Shireen. As Prashant just explained, 45 to 52% of our retail petrol price is clearly taxes. So that really explains on how we stand really tall or really expensive as compared to the Southeast Asian countries. So if the Indian prices are at 80 rupees today, Malaysia, Indonesia perhaps selling their petrol prices at 30 to 40 rupees at max best. So 40 to 45% expensive is what Indian petrol prices are today as compared to Malaysia, Indonesia, etc. Well, just to give you a sense on how the crude oil prices, since 80% of Indian fuel requirement is imported, and we should be following global crude oil prices in that sense, but that clearly is not the case. So even as the crude oil prices from 110 in 2014 have come down to between $50 to $53 per barrel right now, and the rupee hasn't changed much as well, because at that time we were 60 to 62. We are standing at 64 per dollar right now, but clearly the petrol prices are much on the higher side. There's another point that I want to touch upon that's important as well, and that really has to do about the refining crack spreads, because even as the crude oil prices have gained up by $3 in last month, the refining crack spreads have gone up by $5. So that's yet another thing that seems to be making its view in case of the petrol prices.
Okay, so Anuj, let me then put this question to you. From a consumer's perspective, there was a lot of, headlines around these dynamic prices where we were expecting daily revisions, etc. A, has that in reality really taken off? And B, what are companies telling you about how much they perhaps are passing on the benefits of the reduction in crude prices, and how much is perhaps not being passed on?
Yeah, Shireen, I have a slightly different take as well on this. Of all the countries that Manisha mentioned, keep in mind, India is the highest importing country. I mean, after China, of course. We're talking about 3.8 million barrels per day for India. And of all the lists that you're talking about, the next big is Pakistan, which is 1/10 of India's requirement. So I think the point here is that passing on all benefits of crude oil is not possible in a country like India. And there's a reason for that. When crude oil prices started declining first, the government passed on the benefit, I think 7 or 8 times. After that, the economical view was that it's time to now raise excise duty. I think we have to find a balance somewhere. Of course, what has happened over the last 3 or 6 months is that the entire benefit of that fall has been eaten up by either excise duty or by compensating oil marketing companies. But, just to reiterate the point, because we, import 100% or nearly 100% of our fuel demand, passing on entire benefit would also destabilize the macros, which have started to stabilize. The first round, as I said, was passed on. The issue here is that the second round has been completely
sweet spot as far as the macros are concerned.
Yeah, but just one more point, Shireen. Most states have raised VAT. It's the taxes that we're talking about is excise duty, where you also have a state and center angle. I think 1/3 of that also goes to states. So there's states' finances also involved. In a state like Maharashtra, there's a BMC angle also involved. That price has also been added. And just one more point. This is also not straight away a correlation between crude oil prices and petrol and diesel prices. Yeah. Because of hurricane season, you have seen the gasoline cracks actually go up. In fact, in the US, prices are up about 10 or 15% over the last fortnight. So there are a lot of angles involved here. But yes, the prices have not been passed. The price cuts have not been passed clearly over the last 6 months or so.
Yeah, you're absolutely right, and I don't think anyone was trying to simplify this to say that the reduction has been this much as far as crude prices are concerned, and hence retail fuel prices ought to have fallen. And of course, as Prashant pointed out, tax is clearly the big culprit here. Is there a case being made now for perhaps the government reviewing taxes? I'm not so sure, given the fact that we've just got into the GST regime, and petroleum is actually outside of the ambit of the GST regime. So, we don't know whether states are actually going to move the needle at all on that one. But Prashant, Anuj and Manisha, appreciate you joining us here on CNBC TV18 with the Editors Roundtable. With that, it is time for us to wrap up this edition of After the Bell. We'll be right back with you to take stock of the market action. Remember, today has been an exciting day for our markets. Right back with you in a second.